Today was one of those days where the overnight analysis gave me the correct directional framework, but the actual lesson was not just about being right. It was about understanding when the market is clean enough to execute and when it is still operating inside a messy, higher time frame range. First, I'm going to walk through the overnight analysis that I had for going into the session, and then dive into the execution and how I framed it. So here, starting with the daily chart, the first thing I noticed was that price is in a period of consolidation with overlapping bodies and candles sharing ranges. As you can see, there's a lot of wicks and a lot of overlapping, and it's difficult to predict and determine where the next draw on liquidity is. However, there are a few things that we can note. This is Monday's candle, and we can see that it ended up being an inside day, meaning that the range of the entire candlestick was within the previous day's high and low. As you can see, this is the high, previous day's low, and Monday's candlestick is within that range. Whenever we have an inside day, the very next day or the day following that day can be a large expansion day. With the bank holiday on Friday, Monday's price action was bound to be lethargic, and you can see that being in with the inside day. And with it settling down now, I anticipated a potential large range day. This analysis was done around midnight. You can see the time that I uploaded and posted this was 12:19 a.m. Eastern time, and at that time price had swept the previous day's low, which is Monday's low. So I wanted to see quick displacement beyond previous day's low, and if that would happen, then price would likely gravitate towards this discount wick's consequent encroachment, 29,440.25. Next, getting into the hourly chart, this is that previous day's low, and I wanted to see speed beyond the low that's formed. Additionally, we can see price is operating in the range of this low to this swing high, and this red annotated fib is the equilibrium at 29,711.25. So I was anticipating a breakaway gap forming here on the hourly chart. If it could displace past the previous day's low, create a fair value gap that would stay open, that shows heaviness, and then it could gravitate towards the sell side. And then this is that daily discount wick consequent encroachment, 29,440.25. And then beneath that we have these equal lows here and the new week opening gap from last week as well. So with price being near equilibrium, it's still not in a deep discount. However, with seeing how everything is aligned on the higher time frame and then looking at the hourly chart, anticipating this being a displacement, I was looking to see if it could draw here. It doesn't mean that I would engage in the move, but if it were to draw there, that would give more intel and open up room for potential setups. Also, this draw to the new week opening gap, I identified this on Monday's analysis as well, but price action was lethargic and it just was consolidating and did not show the willingness to move lower. Additionally, something that supports the narrative for lower prices on the indices is if we look at the daily chart on the dollar index, we have shaded in orange is the weekly buy side imbalance, sell side inefficiency. And on the daily chart, you can see how the bodies are respecting its high, wicking into consequent encroachment, but failing to lay a body inside of the upper half, even showing strong discount sensitivity. So on the daily chart of the dollar, at least on a short-term basis, I'm anticipating higher prices. So if the dollar is bullish, that supports the narrative for expecting lower prices on the indices. All right, on the 15-minute chart, a lot of the annotations are the same as the hourly, but I'm just identifying potential areas of interest. This buy side imbalance, sell side inefficiency. I didn't extend it, but I wanted to see how it would trade here. And if it could displace through it, that would show heaviness. And then if it could get below the sell side here, the next draw would be this inefficiency on the 15-minute, which is just above that daily wick consequent encroachment identified on the daily chart. Now, looking at the hourly chart overnight, again, midnight was when I posted that analysis. Price had worked its way beneath this 1 hour breaker, which I had annotated on the posted chart. And here I'm just looking at the closing price of the breaker to its low, which is its most sensitive portion. And you can see the body showing premium sensitivity here, failing to be in the upper half. Wicks are getting up above, but there's not a single body that is laying in the upper half or even close to mean threshold. And then we can see the break lower going into the opening range of the New York AM session, fulfilling all the outlined sell side objectives. All right, looking at the AM session through the 5-minute perspective, right at 9:30 open, price wicks into that hourly breaker that I had annotated, wicking just above midnight open, failing to reach for the buy side from overnight. I wanted to see it get pushed up above midnight open, reach for the buy side, and then perhaps work its way lower. That would have been ideal. However, NQ had other plans, failed to reach for the buy side, just wicking into that hourly breaker and then breaking lower. And you can see how all of the premium PD arrays are being used for sell side delivery. You have a high, low, higher high formation. This last down close candle, or the last two consecutive down close candles, are your bearish breaker. 940, price uses that, just wicking into this last down close candle, breaking lower. Price wicks below this candlestick's opening price, validating this and the consecutive up close candles as the bearish order block. I've annotated the consequent encroachment of this discount wick. You can see the body closing on it to the tick. Closing price of the candlestick, 512 and a quarter. Consequent encroachment, 512 and a quarter. Next candlestick opens, wicking just above this candlestick's opening price. This wick, bearish order block, breaks lower right at the start of the 950 macro. 10 o'clock hits, sell side imbalance, buy side inefficiency, small gap, also this volume imbalance. Price wicks into it, using the lower portion of this discount wick once again. Remember, wicks take precedence over gaps, so price is simply wicking into the lower portion, showing premium sensitivity. Cannot even touch that consequent encroachment. Once again, breaks lower, fulfilling all the sell side objectives outlined in the overnight analysis, and completely tearing through everything, getting beneath the new week opening gap. And this is the consequent encroachment of an hourly discount wick, which you can see here. Thursday, June 25th, 2300, up close candles discount wick. Consequent encroachment annotated there. Price delivering to that. This is one of the key levels that I use to frame my execution. One more thing I would like to illustrate. Here I'm toggling the regular trading hours, and I'm going to annotate the regular trading hours opening range gap. So from previous day's settlement price to Tuesday's 9:30 opening price. I know there's a lot going on in the chart, but please bear with me here. You have the quadrants of the opening range gap, and this gap is from the regular trading hours perspective. You have the low and the high, and I'm going to toggle and use the -1 standard deviation here, this blue line. This is 1 standard deviation of the opening range gap. All right, so we have that level here. And as we're going into 1040, approaching the 1050 macro, we're getting closer and closer to lunch, which is when one can anticipate a retracement into the range of the AM session. It'll gravitate towards the high at 10 o'clock. So in this case, this is 10 o'clock. There's the buy side liquidity. So price wicks into the consequent encroachment of that hourly discount wick, which I had previously shown, but the body closes above the -1 standard deviation of the opening range gap. Can it reach it? No. To me, that's discount sensitivity. I am looking for a potential sign that indicates a retracement beginning soon. Again, we have the 10 a.m. high. This is what algorithmically price will gravitate towards during the lunch macro. Bodies again on the 2-minute chart closing above the -1 standard deviation. You can see that level of precision. They can't even touch the level there. And price goes into accumulation here, accumulating strength to reach higher when the right time arrives. So it's just spooling. And then 11:30 is when the official lunch macro begins. So from 11:30 to 1:30 is the official lunch macro time. It can begin as early as 10:30, and we can often see it take place during the 10:50 to 11:10 macro. But as per ICT's official, the lunch period, it's a 2-hour session from 11:30 to 1:30 p.m. So 11:30 strikes. What does price do? Has a run for the sell stops beneath these equal lows, gravitates higher. And I was looking at this up close candle as the bullish breaker. We have a low, high, lower low. This is the highest up close candle in this formation, making this the bullish breaker block. And as you can see during consolidation, price is unable to get above it. And then when price enters the 11:50 to 12:10 macro, price getting above the breaker here. And then this 11:54 candlestick, that's when I enter long the high of the breaker, stop loss beneath the breaker low. You can see the bodies respecting the midpoint, the mean threshold of the breaker, and then it runs for the buy side. So let's take a look at the execution in more detail. All right, you can see the screenshot that I've posted as well. And this was mid-execution. Entry here, you can see at the near the high of the breaker. My initial stop loss was beneath the breaker, just beneath the low. Beautiful displacement. Going into that macro, this down close candle, you can see price wicks just into its small little wick and opening price. Shows sensitivity, moves higher, forming this buy side imbalance, sell side inefficiency. Price wicks into it here one more time, and you can see the bodies are closing above the high of the inefficiency, indicating strength. Price has no problems displacing above this swing high. That shows strength as well. That's what we want to see. I'm looking at this premium wick at this time. It closes above it. I did not want to see a closure beneath the midpoint, so that's good. Another small imbalance here. And as soon as it formed, I annotated it as an institutional order flow entry drill, meaning I just wanted to see it tap, not even reach consequent encroachment, and then displace higher. That's exactly what happened. beautiful displacement, reaching for that buy side at 10 a.m. So the lunch macro profile has been delivered. At this point, the objective is met. The 10 a.m. high has been swept. However, I was trying to extract as much as I could from the position. When price closed above this wick's consequent encroachment here, I trailed my stop just beneath this 5-minute candlestick's consequent encroachment wick, which was the one I showed you during the opening range outline, as well as beneath the consequent encroachment of this discount wick right here, which is above my initial target of 10 a.m. So I'm securing my initial target and the profits from that, and I'm looking to see if it can reach for the 930 buy side. And as you can see, in the end, I ended up getting stopped out just above the initial buy side target, the 10 a.m. high, since price was not able to reach for the 930 opening price. As you can see, today's session required patience. My overnight analysis objective was met quickly during the opening range, so I had to sit on my hands and wait for more information to reveal itself. And once it showed me that a retracement was likely in the cards, with the time and price both being in alignment, that's when I looked to execute. If you'd like me to post a voiceover walkthrough and breakdown of the full execution, I'm more than happy to do that. Please leave a comment below if you'd like to see that. And I hope this was helpful. Hope you learned something. As always, thank you for watching, and I'll see you next time.